Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Monday, February 13th, 2017, and here are some of today's trends in the news. On the market front, it's an up day over there in Asia, boop, boop, up in Europe and up here in the States. But oil's down and gold is down a bit. So what's going on? Well, let's look at the markets. This is from the weekend's Financial Times. Bullishness over Trump policies and earnings fuel record highs. That's right. Oh, and over the weekend, China reported January trade data showing a 7.9% year-on-year gain in exports and a 16.7% jump in imports. Quote, such a robust pace of imports reflects steady growth on the crucial front of reorienting the main engine of China's economy towards domestic consumption and away from exports, says Anthony Karadakis, chief economist at Miller Tabak. The combined trends in both exports and imports makes us even more confident that a residual risk of a hard landing in China is steadily retreating. Very important. And the most important part of this, or not the most important, is China's economy toward domestic consumption. It's a country of 1.2, 1.3 billion people. So, yes, domestic consumption counts a lot. And that's where you're seeing a lot of growth. The numbers are solid. So going back to the markets here, that was on the weekend. Let's look today. U.S. stocks climbed to new record highs Monday as investors remain bullish on President Trump's economic agenda. Quote, the market is going on the optimism of the Trump tax plan that will be announced soon, said Robert Pavlik, chief market strategist at Boston Private Wealth. This is very good news for the markets. Exactly what we've been saying now since basically Trump got elected. You, as TrendsJournal subscribers, know the facts. So here we are. We're February 13th. So November gets elected. December, January, February. The market keeps moving higher. Will there be a correction? Of course there will. Will it be a depression type of correction? At this point, we do not believe so, although others are saying it will be. But again, there's that wild card out there, and Trump is the wildest of wild cards. Quote, there is a bullish bias remaining in the market after Trump said that there will be a phenomenal tax plan coming, said Nick Rach of the Earnings Scout. And, very important, interest rates. They're looking now at basically a 13% chance of a rate hike in March and a 23% chance in May, according to the forecasts out there. But yet, why were gold prices down? You know why. Gold prices slipped on Monday as the dollar rose and equities climbed. But there's still that uncertainty out there. But again, let's stay with the dollar first and the uncertainty second. Your trend alert last week. Rising interest rates in the States will push gold prices lower as the dollar strengthens. Trend alert, trend alert. And what else did we say were the causes of why gold is also a safe haven asset? Well, we went on to say that beyond the Trump card, investors' confidence is being unnerved by unsettling rumblings across the geopolitical landscape. In France, for example, Marine Le Pen's anti-European Union, anti-Euro National Party is gaining strength. So what do we have here today from CNBC? Meanwhile, national elections in Europe this year, starting with the Netherlands at the end of March, make the political outlook uncertain. The first round of presidential elections in France follows in April. The possibility that Marine Le Pen of the National Front winning is a root cause of much uncertainty. Again, history before it happens, we go into much more greater detail than they are. They're only hitting a bunch of points, but not all the big ones. So now on oil. The two things that went down today were oil and gold. Everything went up. Oil futures fell nearly 2% on Monday as signs of rising U.S. crude output continued to weigh on prices, and an OPEC report showing high compliance with last year's landmark production cut deal underwhelmed investors. Let's go back again to Friday. Listen to this clip about oil. Let's go back, TrendsJournal subscribers, back to 2014. In June, when oil prices started going down from around $115 a barrel to where they are now in the mid-50s, and they went down as low as the 20s and the high 20s. Saudi Arabia said they weren't going to cut production, they were going to increase more and drive everybody else out of business. That was their plan, and they failed. They failed miserably. Just like they're failing in Yemen. Well, they're not failing, they're slaughtering a lot of people. With that war in Yemen, they failed in their oil policy. So now, remember, the higher the prices go, you know the story. Another increase in U.S. oil rigs held down gains in the afternoon. Drillers added 8 oil rigs in the week of February 10th to February 10th, bringing the total count up to 591, the most since October 2015. So there you got it. The higher the prices go, the more products are going to come onto the market. We've been repeating that cutbacks from OPEC members are only going to bring so much. But the point that we've been making over and over again is that how Saudi Arabia played the card that by letting oil prices go down, they'd push the competition, a lot of it, out of business. So this is from the weekend edition of the Financial Times. The Saudi decision to allow prices to fall 2 years ago had painful consequences across the Gulf, and its policy shift is a signal that Riyadh is seeking to raise revenue to fund the plan to overhaul the economy. So there you got it. They failed, but they didn't even go into the amount of failure and the arrogance that the Saudis kept pushing, that by prices going lower, all of these shale developers would be out of business and others. So what's happening again? As the price goes up, so does the rig count, and so does production. Moving on, I'm on other economic growth and economic decline. Economic growth slowed in quarter. The economy slowed again in the final quarter of 2016 in Japan. Its feeble spending by consumers took the shine off a pickup in exports and business investment, leaving growth lagging behind the pace targeted by Prime Minister Shinzo Abe's administration. One failure after another, there's hardly been growth. Yet all of the quantitative easing, all of the bond buying and stock buying schemes from the Bank of Japan, the negative interest rates, a failure. But it keeps the Ponzi scheme going. Remember, we're talking about China. and growth over there in the nation as those 1.35 billion consumers. Remember, the Americas, we only have the 0.32 billion of that 1.35 billion. Australia wood growers feel the benefit as Chinese flock to buy their wares. Yes. Dalian Wanda sets sights on European bank assets. Chinese property group diversifies. Deutsches Postbank on shopping list. Go back to your top 10 trends. Buy and sell China. It's there for everybody. And it's not going away. Interesting story. It talked a bit about Japan. One of the reasons why spending's going down, the population's getting older. And the older and older you get, the less you spend, and other things change as well. And in America and much of the West, we have aging populations. And that's right. You know, it's one of our great trends of 2016 and beyond. Longevity, graceful aging, how to do it best, and how to stay healthy and alive. Artful aging is the term that we use. Very important. Looking at trends and how to seize them for opportunities. As Japan ages, menus adapt to finding the gourmet in purees. So what they're saying is that restaurants in Japan catering to an aging population with meals for those who have difficulty chewing or swallowing. In the way that restaurants have long offered children's menus, some are now offering special menus for the elderly too. Yes, not only pureed food so they could go down easy and you don't have a lot of teeth and you can't chew so much, but that's part of it. And it's not only in the restaurants, it's going to be in continuing product lines. But product lines that are going to make you healthy as you can possibly be under aging conditions. It's a trend, it's a big one. Virtually very few companies are tying into it. Because in America, there is the great denial of death. And you see it with all these silicon con men. Yeah, and all the rest. We're going to live to 1,000 years old. We got this algorithm. If you mix it with that one, divide it by 2, put it in a drink and shove it up, you know what, we'll live forever. But in the real world, pop, zip, jack, you're dead. So, big market sector to take advantage of. And going on with Trump and why the markets are rising, the changes taking place, Trump's hard line on Mexico casts shadow. Very interesting story. In the first 9 months of 2016, foreign direct investment fell 24% compared with a year earlier in Mexico, according to the Bank of Mexico. Because of cross-border commerce grew spooked by campaign criticism of free trade deals. There's no end in sight to this. It's going to change. You look at the numbers, they're real. Angst over the longer term is tied to Mexico's dependence on exports, which account for 1/3 of its economic activity. And you ready for this? 80% of the exports go to us, the U.S. And as their currency goes lower, they keep jacking up interest rates, slowing down the economy, and trying to stop inflation from rising. And it's now at about 4.75% year to date. So, on to some other news and talking about playing the trump card. The wildness of the trump card. Is it a joker or an ace? Again, we're looking at the markets, why they're going up. But as I keep saying, the trump card is the wild card, and he's the wildest of wild cards. A story very important from Fitch this past weekend. U.S. President's aggressive tone poses global risks. The Trump administration represents a risk to the international economy and global government creditworthiness, according to an unusually sharply worded report by Fitch, one of the leading credit rating agencies in the world. Donald Trump has sparked consternation at home and abroad with his tough rhetoric and a blitz of executive orders to make good on campaign promises. Fitch argued the predictability of the U.S. had eroded, highlighting the, quote, aggressive tone, end quote, of the administration and raising the possibility of, quote, sudden, unanticipated changes in U.S. policies that could have negative global implications. All right? Go back to your trend alert. Go back to your trends journals, and that's what we're saying. It's not what you like, what you want, what you wish for. It's what is. And the level of uncertainty to us makes gold a safe haven commodity that you might want to consider. We do not give financial advice. As a safe haven against the unpredictability that the whole world is seeing, writing, and talking about. This is Gerald Celente, and that's some of today's Trends in the News.